There we go. Hello, Chip, and welcome. Thank you for joining us today. We are all anticipating the Building Your Home Buying Team is our first session. The floor is yours.
Thanks so much, Sylvia. Again, my name is Chip Allen. I've got many years in the mortgage business, over 23 years here at UNFCU. So it's been a wonderful career and opportunity for me to serve our UN staff members and all of our other members too. Thank you also for all of our attendees for joining us today. We appreciate your time. I hope that you'll find today's event to be useful and educational and maybe even a little bit inspirational as you move forward with this journey of buying a home here in the United States. So we've got a lot to cover. We're going to start off by talking about your home buying team. First off, we'll talk about my colleagues here at UNFCU, the members of your team who work at the credit union. We'll also review some external key team players, people who work outside of UNFCU. And when we've finished talking about all of these various people who are going to become part of your life, at least temporarily, we're going to do a high-level overview of the home buying process, really from like the very beginning, when you make an offer on a home to the point of closing. So you have a good expectation of all the steps that are going to take place, and ultimately, how long is all of this going to take? But we'll move forward first with your mortgage team. If we can go to the next slide, please. Okay, the first person that you're going to meet with when you begin this process is your mortgage representative. And a mortgage representative could also be called a loan officer. Here at the credit union, we use the term mortgage representative. But when you first meet with your mortgage representative, they're going to ask you, what is it that you're looking to do? Do you want to buy a house in the suburbs? Do you want to buy an apartment in the city, a condo in Florida on the beach? Based on that information, your mortgage rep is going to move forward with even more questions and ask you about your income and your assets, what you think your credit profile would be like, what's your time frame for moving forward with the purchase. Really, all of these questions are part of what would be called a mortgage pre-qualification. A pre-qualification is a very preliminary step. It's just based on a conversation, but based on that information, your mortgage representative is going to be able to craft a very well-rounded estimate. Now, it is an estimate of what you're going to qualify for and what type of scenario is going to work best for you. While it is an estimate, I think you'll be surprised at how accurate that pre-qualification will be or can be. And it's important to have that as a starting point. Listen, we would all love to buy a multi-million-dollar apartment on Park Avenue. I mean, why not? But that's really not in the cards for most of us. So to have a realistic, rather detailed pre-qualification to begin this process, that's what your mortgage representative is going to do for you from the outset. The mortgage rep is also going to be your point person throughout the entire course of the loan. So this is the person that you'll work with most closely. They'll be with you from the very beginning until the end. Go to the next slide. I'm already going to take a little bit of a detour here because we've sort of talked about income and assets and so forth. I want to give you an idea of the types of documents that are going to be requested from you as part of the mortgage application process. We will need to document your income and your assets. Even if you bank with the UNFCU, we don't necessarily have access to all of these specific documents. So for income, that would be pay statements. If you work at the UN, a personnel action form. If you're outside the UN, that would be W-2s. If you're a self-employed person, we would ask for tax returns. We would want to document your assets. We need to make sure that you have the funds needed to complete this transaction. So we would gather bank statements, investment account statements, and so forth. We'll need your social security number here in the US to obtain your credit report. If you don't have a social security number, don't worry. Or let's say you have a rather limited credit profile just because you haven't had a lot of credit history in the United States. All of that is okay. We're totally fine with that. The credit union is very well versed in navigating through non traditional credit for our members who do not have a traditional or standard US credit profile. We'll need to ask some questions about where you've lived and how you've lived. I mean, have you owned or rented, et cetera, for the past few years? Of course, we'll get information about the property that you're buying. And ultimately, we will get the contract of sale. Now, later in this same presentation, we're going to go into a deeper dive on the contract of sale. So you're going to have a pretty good understanding of what will be involved with that important document. So now if we can go on to our next slide, we'll get back to our team members. The next person that you will work with, and this is another person that you work with closely, is your mortgage processor. So the mortgage processor and the mortgage representative really act as sort of a mini team, with you as a third partner in that mini team. I mentioned all of these various documents that are going to be required for your mortgage file. Um, the task of the mortgage processor is to gather and organize all of those documents, make sure that they're correct, they're what we need, have them reviewed. The processor is going to also order a variety of reports and documents from outside the credit union, meaning an appraisal report. We're going to talk about that important um, portion of this process. A credit report, a title report. Um, they're basically the organizer of the entire file. And once they have gathered everything, working with you and with these outside vendors to have a complete file, the mortgage processor is going to submit that file for review. Ultimately, they will work with you. Also, they will provide you with, say, a commitment letter. That's your approval letter, and they'll help prep you for the closing transaction. We work very closely with your processor, and again, that's a mini team that will be working throughout the whole process from start to finish. Once the mortgage processor has gathered all the documents and has a complete file, they're going to submit that application file to a mortgage underwriter. And the term underwriter is always a source of mystery for a lot of members. Like, who is this person? Um, and because you don't necessarily, unlike your mortgage rep, of course, and your mortgage processor, you won't really have any direct contact with your mortgage underwriter, but they play a very, very important role in this process. The mortgage underwriter is going to basically receive a complete mortgage file or application file, and do a risk analysis of that file, working with our own UNFCU guidelines and any applicable federal or state regulations that we need to adhere to. They are going to review all of the aspects of that file. And ultimately, it is the underwriter who approves or declines the file. Um, so they have a big task, and the credit union and all lenders are, very reliant on their underwriting team to be knowledgeable, and also be able to work outside the box occasionally, if that's called upon. Anyway, ultimately, the underwriter is going to be the one to approve your file. And after your file has been approved, then we get to the fun part. Your file would then move along to my colleagues in the mortgage closing department. So our closing department or our closing team, they're going to coordinate all of the closing aspects of this loan. They're going to generate, review all of the legal documents, the loan documents. They're going to coordinate with all the various parties for that specific closing date that's going to take place. They will arrange for all of the monies to change hands so that you will ultimately, at the end of the day, walk away with the keys to your new home. So those are your UNFCU mortgage team members, your mortgage rep, your mortgage processor, the underwriter, and the closing team. Now let's move on to our external, very important team members. These are our other key players. First and foremost, your real estate agent. Probably 99.9% of home buying begins with online searches. And that makes sense. There is a massive amount of information available to all of us as consumers online, and you should take advantage of it. It can be a little addictive or mesmerizing. And you'll know what I mean once you've spent 3 hours going down the rabbit hole of Zillow searches. And that's great. You can learn a lot about a community where you might like to purchase, about what's going on in that local real estate market, and it's a great place to start and very wise thing to do. But when you are getting down to the brass tacks, you are actually deciding on a home or homes that you really like, that you'd like to make an offer on, that you want to actually purchase. It is really very, very important that you have the assistance and the guidance of a professional real estate agent. So while you can learn plenty of information online, there is still a massive amount of different information that your real estate agent can provide to you that you'll never find online. Information, about the specific house that you may not find online, about the community, development plans. Is there a new shopping mall being built down the street, or is there a new highway being put in? Information about schools, other community aspects. All of that information is invaluable, and that comes from working with or having the resources of a professional real estate agent. They're also the ones with, professional experience and the strategy to help you navigate through the offer process. It's a rather competitive real estate market in most of the United States now. So you need the assistance and the guidance of a real estate agent who can give you some direction on the strategies that will work best for you. Fortunately, later on in our presentation, I believe Sylvia already mentioned, you're going to have the opportunity to ask some questions to our good friend Lisa James, who's an excellent real estate agent here in New York. We really appreciate her participation. Next up will be a real estate attorney. So when you are buying a home, you hire a real estate attorney to represent you. And what you're hiring that attorney to do is actually multiple things. First off, the attorney is going to represent you during the negotiations of the contract of sale. And we're going to talk about that in just a few minutes, that contract. But that's at the very beginning. Once you're in contract, your attorney is going to conduct a title search on the property. Basically, they're doing a review of all of the sort of legal history of this home to make sure that there's no liens or judgments or any other type of issue that could hinder or hamper your purchase or future ownership of the property. And finally, your real estate attorney is going to physically attend the closing with you, sit right next to you while you're signing off on all of these documents and review them as you go to make sure that everything everything is right, that everything is ultimately to your advantage also. We've also got my old friend and longtime professional colleague, Chris Kitanakis, who will join us for our Q&A session later. So thanks very much to Chris also for joining us. Okay, I mentioned very briefly an appraisal report. So what is that? When you're buying a home and you're taking out a mortgage on the property, you are pledging your home as collateral for the loan. That's how mortgage loans work. So as a lender, we need to make sure of what the property value is, that the property is worth what we're lending to you and what you're paying for it. So we hire a professional appraiser to compile an appraisal report. It's basically a report that determines the fair market value of the property. So the appraiser will visit the property, take pictures, do measurements, do a whole analysis of the actual specific property and the grounds around it, if applicable. They'll also do a comparative analysis with other recently sold similar homes. These are called comparable sales. And merging all of that information together, the specifics of this home plus other recent comparable sales, the appraiser is going to determine the market value or the fair market value. And that rather lengthy and somewhat complex report is going to be the basis for our approval of the loan, and approving the property as collateral for the loan. So the appraisal report is very important. Everyone's always a little bit on pins and needles waiting for the report to be completed. But once it's done, you'll be happy to see it, and it's a very important part of this process. Somewhat similar to an appraisal, but yet quite different, is a home inspection. So that appraisal that was done, it's really just to determine the market value. And I say just because it's a rather complex process, but that's what the appraisal report is for. But the appraiser is not really studying the structural issues with this home. So, especially if you're buying an existing home, not a new construction property, an existing home, it's important that you have the home inspected. So, you would hire a home inspector to visit the property. You're frequently invited to go along so you can see what's taking place. Um, the inspector is there to review all of the mechanicals of this property. So, they're going to check out the roof, the foundation, the wiring, the electrical, the heating, the plumbing, to make sure that everything is in good shape. Hopefully, everything's in great shape and there's no issues. However, let's say the inspector does come up with some issues, that could be problematic. That may give you an opportunity as the buyer to go back and um, renegotiate some things with the seller. You may ask that the seller either repair some items before the closing takes place, or you may ask that they give you a credit so that you can make the repairs if they're needed. Also, you could end up with a situation, unfortunate, but could happen, where the inspector finds out that there are massive problems with his home. Cracked foundation that's going to cost $100,000 to repair, or whatever it may be, underground oil tanks that are leaking. Ultimately, there could be problems so great that you decide that you don't want to buy this home. Um, that's unfortunate, of course, but it's better to find out now rather than later. So that's, just spells out the importance of having the home inspection completed. Um, your real estate agent would, of course, be able to help you find a local home inspector that they've probably done work with in the past. There's going to be two different types of insurance that are going to be necessary. So, first, you'll work with a title insurance agent. So, I mentioned that your attorney is going to review sort of the legal background or history on this property. And they're going to do that by way of requesting a title report, which comes from a title insurance company. It's all of the background information on a home. And your attorney is again going to review it to make sure that there's nothing currently outstanding that would be problematic with your ownership or your purchase or the transfer of the deed for you. Um, Ultimately, once the title report has been reviewed, the title insurance company is going to issue what's called title insurance, and you pay for it once when you purchase the property. It is insurance that protects you as the owner and us as your lender against any types of future legal claims against the property. Title insurance doesn't come into play all that frequently, but it is a requirement. It is necessary, and it's important for you and us to have that type of coverage. And your attorney would take care of the purchase of that title insurance. Title insurance rates are set by each individual state, so it's fairly a transparent process. Finally, you will be working with an insurance agent or a homeowner's insurance agent. So, since your home is acting as collateral for our mortgage loan, we want to make sure that if the home is damaged or destroyed, that there is insurance in place to rebuild the property or to restore or to repair the property. As a homeowner, of course, you want to have that same type of homeowner's insurance. You need it too to protect yourself and your investment and the place where you live. Typically, people think of home insurance for a fire or a tree falling on a house, and those maybe are the most common. But there are all types of insurance coverages that may be needed. If we go to the next slide, we'll talk a little bit about that. Depending on where you buy, there could be added or supplemental insurance that's required, not just recommended, but required. Let's say you buy in Florida, you may need to have hurricane or tropical storm coverage. If you buy out west, you may need to have wildfire insurance. Anywhere in the United States, you may need flood insurance. Um, so your insurance agent is going to, of course, think about the specifics of where you're buying and what you're buying, and use some federal mapping information to determine what types of coverages either are recommended or required. So these are all of the different team players working with you, starting with your mortgage rep and all of my colleagues here at UNFCU, to these also very, very important external team players. Now that we've talked about all of these team players, um, let's talk about this home buying process. Go to the next slide. Okay, well, first, you're assembling your team. You've met with your mortgage representative. You've been pre-qualified for a loan. You know what's probably going to work well for you. You found a real estate agent that you like, and you have found a real estate attorney to represent you throughout the process. So you've been looking for a home. That could take a weekend. Hey, you might be lucky. Or it could take 6 months. That will be up to you and the search that you want to take on or conduct to find the home that you want to purchase. But ultimately, when you found the home that you want to buy, you will make an offer. So together with your real estate agent, you would make an offer to the seller. And there could be some negotiations back and forth, of course. Number one on price. Some other issues could come into play, things like the closing timetable. Do people want to close sooner or later? Frequently, there are some negotiations or discussions about other terms, other items that would be included in the sale. I mean, that could be things like draperies or light fixtures or appliances. All of that's important, and ultimately, all of that will be spelled out in the contract of sale. So you've made your offer, you've negotiated back and forth, and you and the seller are in agreement. At that point, the seller's attorney, because the seller has an attorney representing them also, the seller's attorney is going to draft the contract of sale. So the contract of sale, which is also sometimes called a purchase agreement, is the legally binding document that says that you're going to buy this home and the seller is going to sell you this home under these agreed upon and contractual terms. So the seller's attorney drafts the contract. That goes to you and your attorney for review. Again, these negotiations may take an afternoon or they may take a week, but ultimately, the contract of sale will be hammered out and agreed upon. Now, at the time that you're executing the contract as the buyer, you are going to be expected to make a contract deposit, which is sometimes also called an earnest money deposit. So the amount of deposit that you make, this good faith deposit, will depend on where you're buying. In some parts of the country, it's a comparatively small amount, $5,000, $10,000. That's still a lot of money. But when we talk about some other situations, it's comparatively low. Um, So you're buying a $500,000 home in Florida, and you may be asked to make a $5,000 contract deposit. If you're buying in New York, especially in New York City within the five boroughs, you'll be expected to make a contract deposit equal to 10% of the purchase price. So on that same $500,000 purchase, you would be expected to make a deposit of $50,000. That money you would write a check or wire transfer the funds to the seller's attorney, and that money would be held by the seller's attorney in their trust account until the time of closing and would ultimately be um, credited towards your total purchase price. There are um, contingencies in the contract of sale that would allow for the refund of that money if the deal didn't work out. But that's something that's important to review with your attorney, which is another reason why you have a professional real estate attorney representing you to make sure that all of those protections are in the contract of sale that you are about to sign. So what happens next? You've signed the contract of sale. Great. Up until that point, not much would really be happening here at UNFCU. You probably would have been pre-approved. We're going to talk about pre-approvals in our next segment. But we're just sort of in a holding pattern. But as soon as you submit that contract of sale to us, you're going to forward it to your mortgage representative, everything is going to really begin to move. You submit the contract of sale to us, your processor will be in touch to, perhaps update any documents that need to be brought current from you, any other things that may be outstanding. Again, that appraisal report is going to be requested. Again, we know how important that one is. Um, your attorney is going to complete that title search, that legal background search on your property. The file goes back to that underwriting team, and your underwriters will issue that final loan approval, meaning that you're cleared to close. Everything is good, and ultimately your file will go into closing. So that the closing is that day where all of the parties meet: buyer, seller, attorneys, real estate agents, title insurance agents. Um, the monies all change hands. All of the various legal documents. Um, um, are signed and executed. The deed is transferred into your name, and ultimately you walk away with the keys to the home. So, how long does all of that take? Again, like so many different things that we've discussed so far and will continue to during these conversations, a lot of it will depend on where you are buying. So, if you're buying in the Washington, D.C. area, or out west, California, Oregon, Washington State, um, parts of Florida, the expectation is the closing will take place in roughly 30 days. So it really moves quickly. Once you've signed the contract of sale, everything is ready to go, or everything begins to go very quickly. Um, if you're buying in the northeastern United States, you're probably looking at more like 45 to 60 days. If you're buying in New York City, it could even be a bit longer. But generally, your closing would take place in 30 to 60 days from the time of signing the contract of sale. So that's that sort of bird's eye overview of this whole process. Hopefully that helps you understand some of the steps that are going to take place, and what you can expect and who's going to be participating when. So I think that brings us to the end of this section of the presentation, and my good friend Sylvia is going to come back and we're going to answer some questions from you.
Thank you, Chip. I mean, that was exceptional in explaining each role of this process. It truly does set the expectations and really sets that stage to move forward with that confidence that we've been talking about. We do have some questions that came in. One of them being in your explaining of each role, Do I need to find all of these team members, attorney, appraisal, title? Who does that?
That is a great question. Um, of course, the team members from UNFCU, they come along with your application. So we come as a group. Ultimately, you have the opportunity to choose pretty much all of the external participants, your real estate agent, your attorney. The title insurance agent would generally be found by the attorney. The credit union would select the appraiser. You would select your inspector, um, and you would choose your homeowner's insurance agent. That said, I would suggest that you speak to your mortgage representative and perhaps get some referrals from us. We're happy to. We have many years of working with a lot of these same colleagues, real estate professionals, real estate agents, real estate attorneys. We're happy to connect you to people that we know and trust. You're certainly under no obligation to use our recommendations. If you have friends or family members who have a good recommendation, that'd be a great place to start. Ultimately, I would say find a really good real estate agent, and that real estate agent is going to bring all of these other parties in for you. They'll help direct you to find an insurance agent, a home inspector, an attorney. Um, your real estate agent is really a key player and a key partner in the whole process.
All right, excellent. Thank you. I mean, it definitely puts us at ease that you do have a backup in case we can't find our own. A member would like to know at what exact stage in the search, this buying process, will the appraisal or the appraiser do the appraisal? And at what stage in this process should the home inspection actually be done?
Okay, another great question. Let's touch on the appraisal first. So the appraisal is only done after the contract of sale is signed. Sometimes people question, well, why am I not getting this market value beforehand? Well, there's a lot of information in the contract of sale that's going to be built into the appraisal report. So the appraisal can't be completed until after you've signed the contract. However, one of the things that I mentioned, again, going back to the importance of having a good professional veteran real estate agent, your real estate agent is going to do a sort of similar comparative analysis for a home that you're interested in. It's not specifically an appraisal report, but your real estate agent can compare this home that you're looking at buying to many other recently sold properties or properties that are listed for sale to give you the confidence of knowing what the current market value is for this home and what's the appropriate price to pay. For the inspection, again, it goes back to location. In most places, the inspection is actually done before the contract of sale is completely is executed. Um, might as well go ahead and have that done beforehand. There are some states, New Jersey, for example, where you sign the contract of sale and then you're given a certain amount of time to have an inspection done. And if there's issues, then you have to go back to the table and work on renegotiating some of these issues or aspects of the contract of sale. So again, your real estate agent and your mortgage representative would really be able to give you good direction on when the home inspection would take place, and it's really sort of set by the municipality or even the state.
Gotcha. And Chip, you mentioned something about paying there. So one of our members wants to know who will pay for the services of the realtor, lawyer, appraiser, inspector, the whole list.
Okay. Ultimately, the vast majority of these services are going to be paid for by you. Um, really, all of them, with a small caveat for real estate agents. And we'll probably even have Lisa maybe give a little bit more in depth detail because how real estate agents are paid has changed some over time in the recent past throughout the United States. But in general, all of these other services are going to be paid for by you. I mentioned at the beginning when you're first meeting with a mortgage representative and you're talking about a pre-qualification for a specific loan amount and et cetera. Another thing that they're going to do is spend quite a bit of time with you talking about your budget. And we're going to talk about closing fees in our next segment of this event, in our next presentation. But that's information that's going to be available to you from day one. What types of fees should you expect to pay? And listen, it's expensive. Closing fees are a large amount of money, and you have to be prepared for them and budget for them. And your mortgage representative is going to be the best person to walk you through all of that. Just on a side note, we are the credit union for the United Nations, but we're still a US based financial institution and subject to all federal laws and regulations. And we are required by law to issue to you estimates of closing fees at different stages during the process as they become more and more detailed. Um, and of course, we do that. We follow all of those federal guidelines. So information in a very clear and transparent way by law is now afforded to you throughout the process. It is a win for consumers, that federal law.
Excellent, thank you. You took the words right out of my mouth. The transparency that the members will see throughout the process is definitely key. It can be a very complicated process, very complex
Yep.
and anxiety driven. And to know that, we're very forward with the process itself and demonstrate that transparency is key. You did mention our next session. I do want to give ample time for you to be able to cover the home buying process. So with that, we're going to wrap up this session and take our very first break, and we'll see everyone back in 5 minutes.